Hi, and welcome to Futures Discovery at John Lothian News. I'm your host, Cortez Draper, and like you, I'm no expert, but on this program, we'll embark on a fascinating world of futures and learn from top professionals in the field. Today, we're delving into the diverse world of careers within the futures industry, from the fast-paced world of trading to the analytical realm of risk management and technology. There's a multitude of career paths in this dynamic field. First up, we have a futures trader, a dynamic role where individuals actively engage in buying and selling futures contracts. Traders analyze markets, assess risk, and make decisions to capitalize on price movements, making it a thrilling and fast-paced career. Next, we explore the role of the commodity broker. These professionals facilitate the buying and selling of futures contracts on behalf of clients. They provide market insights, execute trades, and play a vital role in helping clients manage risk. Another essential role in the futures industry is a market maker. A market maker is a financial institution or individual that actively facilitates trading by providing liquidity. This role involves continuously quoting both buying and sell prices for futures contracts, ensuring a readily available market for traders. Market makers play a crucial role in enhancing market efficiency by narrowing bid-to-ask spreads and minimizing price volatility. They typically profit from the spread between the buying and selling prices, and their continuous presence contributes to a more liquid and smoothly functioning futures market. Risk analysts are another crucial part of the industry. They assess and manage financial risk associated with futures trading. Their analytical skills are vital in developing strategies to mitigate exposure and ensure a balanced risk profile. Ever wonder who ensures that everyone plays by the rules? That's where compliance officers come in. They monitor activities to prevent fraud, market manipulation, and other regulatory violations, ensuring the industry operates ethically and transparently. Market analysts are the detectives of the futures industry. They study market trends, economic indicators, and various factors to provide insights and forecasts. Their analysis are indispensable to traders and investors making informed decisions. Quantitative analysts, or quants, use mathematical models and statistical techniques to analyze financial data. They develop algorithms for trading strategies, risk management, and pricing derivatives, adding a quantitative edge to the industry. Technology plays a pivotal role in the futures industry, and technology and software developers are at the forefront. They design and develop trading platforms, algorithmic trading systems, and other technological solutions that power the industry. These are just a few snapshots of the exciting careers available in the futures industry. To get a more insightful view of the careers in this industry, let's talk to Dan Pires. Dan is currently serving as the head of trading operations at Akuna Capital, bringing a wealth of experience in the financial industry, particularly in the dynamic realm of trading. Today's focus revolves around various career paths within the futures industry, a subject Dan is well equipped to give us his extensive background as a senior trader at Akuna Capital and other notable roles throughout the industry. You have a very diverse background. I mean, coming out of engineering and then market making and then working for a multitude of firms. Some of this, the educational side of trading and now the head of trading operations, working with various departments within Akuna. How has your journey shaped your understanding of markets and trading dynamics as you've evolved throughout your career?
I started in the business years ago, where I attended an engineering recruiting day at the University of Virginia, where I studied systems engineering. And a market making firm, Susquehanna, came to recruit at that engineering fair. And I had never really thought about going into sort of the financial world before speaking to them. But as we got to talking, it sounded like such an exciting and interesting opportunity that I decided I would, give it a try. I started off on the floor of the American Stock Exchange, and I traded down there for a number of years before jumping to another trading firm that was starting in Europe at the time and was looking to expand. So I moved over to London and spent a year or so there before then moving to Chicago with that firm as they expanded their operations. In the meantime, a couple of years later, someone that I had worked with at a previous firm was now at Akuna Capital, and we got to talking. And the fact that they were really investing in technology and their systems was really interesting to me. I had seen that the industry was really consolidating towards the firms that were sort of putting the emphasis on that sort of competitive advantage. Hours after trading, I sort of found myself spending time educating the new junior traders that had joined the firm at that time. As we continued to grow and take on more junior traders, the firm realized that it was important to build out a recruiting pipeline and a curriculum to train all of these new recruits. And so I focused on that for the next couple of years. So we stood up a program that essentially built a training program that was a rigorous 10-week process where new junior traders would join the firm and go through that before they ultimately went over to their first trading desk to continue their careers. Recently, I stepped into this role of head of trading operations, which is a position that allows me to oversee and manage a lot of the nuts and bolts that go along with running a trading firm. So I deal with different departments, such as risk, compliance, middle office, back office, accounting. Essentially, what I'm doing is really trying to make sure that desks have the resources in place and are set up for success, and that everything is running smoothly, and that we have a plan of attack as far as expansion and optimizing the current trading desks that we have.
Can you talk about how a professional finds work-life balance and the routine of a professional trader?
Trading requires extreme focus during the trading day. There are many things to balance, and there's an unbelievable amount of information that is coming through to traders on the multiple monitors that they're looking at. So as you can imagine, by the end of the day, traders are mentally exhausted from all of that. Counteract that, we really stress a work-life balance at Akuna. You can't be expected to put in a 6 or an 8 hour workday where you're focusing on the screens, and then at 3 o'clock or 2 o'clock, depending on when the markets close for their particular product, expect traders to put in another 5 to 7 hour day. So we're certainly not expecting banking hours out of our traders. You're either going to get burnt out, or at the very least, you just won't be sharp and focused again the next day to be able to focus on those screens during the trading day. We definitely tell employees to have a good work-life balance, and to do that, we actually provide a lot of different clubs and activities at Akuna to foster that. And to do that, we have a bunch of different clubs and outings. So we have everything from sports teams to niche clubs that people can join, and that allows people to sort of get away, recharge, have some fun with the people that are working with them.
Could you elaborate on the responsibilities of a commodity broker? How do professionals in this space facilitate the buying and selling of option contracts on behalf of clients, offering market insights, and aiding in risk management?
Akuna deals with brokers in the options markets every day in almost every product that we trade. For those that aren't familiar, brokers are essentially individuals that connect buyers and sellers in the marketplace to each other if they don't want to interact directly on the electronic exchanges. A broker might receive a call from a client who wants to execute in an options marketplace. That broker will then reach out to one or more market makers or other individuals in the marketplace, obtain a market for that specific options trade that the client is interested in, and then relay that back to the client and continue working through on both sides of the phone line or chat to execute that transaction. Those brokers provide not only a service to their clients, but also some sort of, at times, research or insight into the marketplace.
Can you explore the role of a market maker? Elaborate on how it contributes to market efficiency by providing liquidity, and what sets this role apart in the terms of continuously quoting buy and sell prices for future or option contracts in your sense?
Essentially, market makers provide liquidity to an options market. Essentially, what that entails is providing a bid and an offer price. So a price at which we will buy and a price at which we will sell an option or a series of options into the marketplace, so that those that want to transact in that market know the prices at which they can either buy or sell. So this is something that's sort of, might not be apparent or is taken for granted for those that aren't in the industry. But, when you want to go out and buy 100 shares of Apple, it's a pretty liquid market. So there's usually someone who is offering, to sell Apple at that time, and you will usually interact with that individual. But in the options world, where there are thousands and thousands of different contracts, you need someone like Akuna that is providing that, fair two-sided market to everyone so that they can interact, because there might not be a seller of that particular option that you're looking at the time that you want to buy it.
As someone who interacts with markets, it's great to have someone on the other end that's willing to take those orders and take those contracts when you're ready to change your risk management or hedge your risk. And so that liquidity is invaluable. And so thank you to Akuna and other market makers to allow participants and traders to continuously interact with markets when there's nobody else willing to make those transactions. Could you talk about how risk analyst is a critical aspect of the futures industry? Drawing from your experience, do risk analysts contribute to assessing and managing financial risk associated with trading?
I'm working with the trading department very closely to make sure that traders' portfolios of options, which are the portfolios of the options that they own or have sold, are managed and are within acceptable risk thresholds. So the risk department, which is made up of various analysts and risk managers, has devised a set of mathematical models that allow us to understand and stress the risks of owning options in several different degrees of freedom so that we can understand the risks of our portfolios. Options are one of those things due to the way that their prices change that are a bit tricky, and they can be a little dangerous to investors if they're not properly understood. So that's where these sophisticated models come in that allow us to stress test different underlying movements, different changes in volatility, different changes as assets decorrelate or as fundamentals change. And, the risk department sort of built models on the back of all of that using a lot of data, statistics, mathematics to develop those systems.
Could you shed light on your economic indicators that market analysts may use to provide some insights and forecasts that are crucial for traders and investors?
So Akuna is definitely plugged into market trends, economic numbers, and headlines, or even, in this day and age, tweets that might impact, financial markets. While we don't try to forecast or predict where markets are going to move, we do find that it is critical to understand, what other market participants are, working with in terms of forecasting what the markets might do with different headlines or market moving numbers. But we definitely stress to new junior traders that until they have a working crystal ball that will tell them where the marketplace might go, that they really shouldn't put a lot of effort or time into trying to predict that. For us, let's say a key number that comes out every week that might move the market. We understand where the market is pricing that event and how much the event might move the marketplace. But we aren't in the business of saying, okay, we predict that this is going to move the markets, 2% up. Instead, we are continuously making markets, and, we're happy to sort of provide that marketplace for those that have a crystal ball that, says that the market is going to move up 1 or 2%. And then a few seconds or so later, someone else has a different crystal ball that thinks that the market is not going to move 2%. And for us, we're happy to transact with both of those parties within a few seconds. We provided the service of, providing that liquidity, and we don't have to take an opinion or forecast, where the marketplace is going to go to do that.
Can you shed light on quantitative analysts or quant and how they bring the quantitative edge to the industry? How do they use mathematical models and statistical techniques to analyze financial data, developing algorithms for trading strategies, risk management, and pricing derivatives? In today's day and age,
the marketplace is a quantitatively driven market. All of the decisions that Akuna makes are, built on, data-driven ideas or decisions or models. We definitely have moved away from times where someone can sort of act on a gut feeling that the market is going to do X, Y, or Z. Instead, all of that is driven, by quantitative techniques, and those are, part of the reason that we have an edge in this industry, because we are able to look at the data, and are constantly refining our mathematical models and using statistics and big data to drive some of the very key decisions that we're making in pricing derivatives.
Seems like data has been a trend throughout all these career paths, especially as we get into this new age of markets, and so it's something that's going to continue to grow. I assume as we just continue to advance with technology. And based on your extensive experience, what advice could you offer to aspiring professionals looking to carve their path in the industry?
You can have no shortage of skills or courses in things like statistics, or mathematics or probability, and then certainly even more as important is a background or aptitude and abilities in coding. So that's something that is going to be an arrow in your quiver wherever you go in this industry or in other sort of technical industries. So if you enjoy coding, the more of that you can do, the better. It's just the way that the industry has gone more and more into that data-driven, mathematical, programmatic way of tackling problems. That's sort of the thing that I always come back to give advice to people that are looking for that.
Dan, we appreciate your time and your insight into various roles within the industry. Your wealth of experience adds valuable perspective into our exploration of these critical aspects of the financial world. Thank you for joining us on Futures Discovery.
Thank you very much for chatting with us. I enjoyed the opportunity.